It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Yes, welcome back to the Real Estate Breakfast as we break down the Australian property market as it happens right around the country and streaming on Spotify and Apple Podcasts from Bundaberg to Canberra. And if you'd like to get in touch, share your views or tell us what is happening in your area, our email address is myrealestatePodcast@gmail.com. It is a Tuesday, June the 23rd, and the current real estate crisis affects the younger population and those who have also retired. The ABC ran a story about a woman on the Gold Coast who spends her retirement travelling in a motorhome with her two dogs, but not by choice. For the past 3 years, she has been living in her vehicle while waiting for social housing. Now, before you make any judgments or jump to the wrong conclusion, the woman that we are talking about used to have her own business. In fact, she had retired early at just 40 years of age and was living a comfortable lifestyle. She was a self-funded retiree until she lost all of her properties due to fraud, and then unable to work following a serious car accident. So living on the streets can, literally by her definition, happen to anyone. Many women don't feel safe in shared housing. You know, it's stressful and it causes many anxiety issues, especially for older women around Australia. But rising rents means that they often can't afford to live alone. And whilst this is happening on the Gold Coast, the Gold Coast Council receives about 3,000 complaints related to people living in cars and vans across the region every year. So that is a sad indictment on where we are in the housing market at the moment. A couple of weeks ago, we took you back to 2023 to look what the market was doing back then. This morning we thought, let's do this again, and we're going to take you back to October of 2024 with some comments on where we were with a snapshot back in time.
It's fair to say that we're moving through a very diverse market. We always say that Australia is not one housing market, but at the moment in particular, there's a really wide range between the top performers, Perth, Adelaide, Brisbane, Melbourne, Canberra, Darwin and Hobart, which each saw quarterly declines. Sydney is still up, but I think that's because it's a market that historically has been relatively constrained when it comes to new levels of supply. At the moment, it's being driven by more affordable pockets of the market that offer house and land for a growing number of young families. And even though market values are still rising, you can even see momentum coming out of the Sydney market. As you say, that 0.5% lift was one of the softer growth rates that we've seen in the market over the past few years. It's down from 1.3% in the June quarter, and it's down from a 2.5% quarterly increase for the September quarter of last year. So at 0.5%, we can see it's definitely slowing.
Yeah, so, if you're in Sydney and you're saying, oh, gee, it's not much of a rise, it's very, very slow, just compare yourself to Canberra, Hobart and Darwin and Melbourne, which is all down, which circles us back to Perth, Adelaide and Brisbane. They saw that slower momentum, as I suggested, although they did continue to perform, and that's the positive side for those markets.
Yeah, absolutely. Anyone who has owned in Perth or Adelaide pre-pandemic has seen extraordinary cumulative change in home values. Since March of 2020, Perth's home values are up 75%, or the equivalent of a $341,000 increase in the median value. Adelaide has seen similar performance, up 69%, or an additional $330,000 added to the $330,000 added to the median value, and Brisbane sitting up 66%, or $350,000 added to the median value. So even though those growth rates are finally slowing down across these cities through the cycle, at 4.7%, Perth's quarterly growth rate is still extraordinarily strong.
Ready to step up your property knowledge? Access powerful insights with us.
Well, there's more work than the industry can cope with, which is a first-class problem, but the challenge is delivering it. In the last 12 months, we've had the Queensland government's budget. They have gone right out with a significant capital works budget. They'll spend $27 billion in 24-25, $107 billion over the next 4 years, and then we have the lead up to the Olympics in 2032. So there is lots and lots of work for the commercial builders. And at the same time, we have state, territory and the federal government committing to this target of 1.2 million new homes over the next 5 years. So starting at 24-25, that breaks down to 49,000 new dwellings, units and detached houses in Queensland each and every year. And thus far, we've fallen behind. So that's where we're at. We've still got issues around the cost. I think the costs, particularly of materials, still going north, but not at the same rate that it was a year ago, and certainly not a lot less than 2 years ago.
Yeah, and I remember when we spoke over 12 months ago now, it was a different planet. I mean, you were having builders going out of business. It was a pretty dire situation, I remember, 12 months ago, and that corner has been turned by the sound of it.
Well, we've still got issues with builders dealing with legacy projects, so those fixed price contracts that have put them underwater, and builders can afford to wear those losses. But at some point, the music stops and they fall over. So we've seen insolvencies. There are still some to come, I would predict. We have turned the corner, and contracts that are signed this year and maybe a bit into last year, I'm confident are profitable, whether it's the commercial projects, residential development, or detached houses. Builders are making money, the trade contractors are making money, but there are still issues with insolvencies, sadly.
Now, you mentioned the city of Knox. For the listener, can you just sort of explain what that captures in terms of suburbs?
We got Rowville, Listerfield, Ferntree Gully, Baronia, Bayswater, Upper Ferntree Gully. It's quite a tight net kind of suburb, which is outperforming actually any other suburb at the moment in Melbourne. It's kind of always continuously growing. I think the buying market and the selling market is always consistent with the city of Knox, and definitely outperforming any other area in Melbourne, to be honest.
Now, because you're in Melbourne, I guess we should talk a little bit about the property tax and the sentiment with investors, because some of the investors, they've decided, well, I'm going to leave the market. And you know what? Perth actually looks pretty attractive at the moment. Oddly enough, there are some transactions happening the other way from Perth investors looking in at the Melbourne market. A lack of trust with the government. How much does that play on the minds of those investors at the moment in Melbourne, do you think?
Yeah, look, it's quite enormous. I've actually spoken to a few friends that aren't even in real estate, a lot of investor friends of mine as well. Essentially, the investors have lost all trust in the Melbourne government, just with the land taxes. Everyone got hit with quite enormous land taxes, obviously, in the last couple of months, which has caused a lot of them to offload. So, for example, our office has 2,000 plus properties on our rent roll, and we saw or are seeing 10% of them come to the market before the end of the year. So, yeah, we're starting to see a lot of them leave the marketplace from Melbourne and start to head towards other states such as Perth and Adelaide, which, yeah, we're seeing quite a boom actually right now.
Let's right now, Tim, have a look at the grants for first home buyers, because that is creating more of a buy-in factor from what you're seeing.
Yeah, definitely. I think with the first home buyers, they're starting to be able to borrow up to around $975,000. What we're seeing is, I think the increase in first home buyers, definitely under that $1 million mark, is where we're starting to see majority of buyers enter the market, especially if it's close to that $700,000 to $800,000. Once you start to go above that $1 million mark, we lose a lot of the buyers, because now we're starting to incorporate people who are having to borrow a lot more money, which is capping a lot of those those buyers to enter the market.
Now, just in the last week or so, we've done podcasts in the likes of Rockhampton, also Darwin, talking about their median house price, $500-$600, 800 square metres. And they're talking about interstaters moving from the likes of Melbourne. Are you sort of seeing that firsthand, people moving out of the area?
Yeah, we definitely are. I think we saw it, to be honest, after lockdowns. I think the majority, an enormous amount of people from Melbourne actually moved out to the state, to Queensland. A lot of them moved to Perth, a lot of them moved to Adelaide. So we're still seeing that now. Funnily enough, I've recently started to see a lot of people move from New Zealand to Australia now. So in the last week, I've met about 10 people who've actually decided to leave New Zealand just because it's getting a little bit too expensive now, and they're moving to Melbourne. So we're seeing a shift out, but we're also seeing a shift in from certain directions.
Ready to step up your property knowledge? Access powerful insights with us.
I think most people think of Hamilton Island as this really high-end destination where it would cost you an absolute bomb to buy property. And that can be true. I mean, there's definitely that element to the market. But we find our core demographic, mum and dad investors, you can get in the market from $250,000 for a really small one-bedroom, nice little investment property. But the core of our market sort of sits at around that $1 million to $1.3 million, two-bedroom holiday let type property that can get you a really nice return of sort of 5+%. And what we find is people buy these properties so that they have that lifestyle investment. They can come up and use the property, but they also get that really nice return while it's vacant. They're really easily managed. The whole island is geared around holiday and holiday making. So everything's set up and in place to attract these type of people to come to the market, spend money and, stay in these beautiful luxury properties.
Now, you said $250,000 for a one-bedroom apartment. What?
Yeah, I know, right? It's crazy. Usually that type of property is a permanent rental. It's leased out to, say, a staff member that lives and works on island.
Every week, unravel the real estate market to empower your real estate knowledge.
Townsville's always been the sleepy town that has a lot of mining security around it, cane farming, and then also obviously we have the largest army base in Australia. So the median price in Townsville currently is $527. That would get you a beautiful home in most of the newer suburbs where you might have a pool, 800 square metre block, 4 bedrooms, 2 bathrooms, 2 garage, theatre room as well. So all your modern finishes. And everything in Townsville is no more than 25 minutes away from each other. So it's a very well laid out city.
What are those units looking like at the moment, median price?
Oh, the unit's probably about 370,000 for a unit, and that will probably be the median, like a standard 2-bedroom. And this is why we're now getting a lot of unit attention back in Townsville, because also too the house stock is very minimal, so people are looking for an alternative. We're very lucky in certain areas to be on the market for a couple of hours or a day. So it's been quite a big change for us, adapting how we as real estate agents actually function. It's a lot more done online, WhatsApp videos. They want it done quicker to beat people.
Yeah, I'll start with Perth. So look, listings here have increased by another 8% in the past month after I think 12 the previous month. So we're probably up about 20-ish%, maybe 25% over the last couple of months in terms of listings, but that's quite typical of spring and the spring selling season. But it's important to note we're still 20% lower than this time last year. Buyer demand may have softened a little bit through winter, but it will be interesting to see what happens in spring and whether that does bounce back up or not. And then looking around the country, nationally, we saw just a 0.4% increases on prices across the major capitals, with half of the major capitals now either flatlining or declining. And that includes Sydney, which grew just 0.2%, and Melbourne, which has fallen a further 0.1%, while Perth and Adelaide continue their strong growth, and Perth continued to lead the country with a 1.6% growth rate. So still in the number one spot, but the rate of growth has begun to taper slightly.
Yeah, so there it is, a look back to October of 2024. Some interesting mind-bending comments on the market, including prices, conditions, and things that were shaping the market. And that'll wrap us up. Have yourself a great Tuesday.
We connect you to the best real estate information across Australia. The Real Estate Podcast.